So why aren't you profitable? All right. First of all, your model is ass. All right. If your model has under a 40% win rate, give it up. Just, just stop. Just stop it. All right. You have shit risk management. If you have shit risk management, then realistically you just won't be profitable. Like I'm sorry to tell you. If you have like look, the only way you should be setting up your risk management is by backtesting multiple times and setting up your risk management like that. If that's not how you're setting it up, then it's ass. Anyway, I think my camera's lagging just a little bit, but I don't think it's anything serious though. Okay, my bad. But so third thing is your psychology is effed up. If your psychology is effed up, then you just won't be profitable. Like let's just keep it a buck out here. Psychology makes or breaks you as a trader. Like let's look it up. How much of trading is psychological? Let's look it up. How much of trading is psychological? 70 to 80%. Okay. Okay, is anyway, it still makes up most of what trading is. So that's the point I'm trying to get here. Anyway, so let's actually get into how to become profitable. How do you become a profitable day trader? How do you go from being an unprofitable nobody to actually becoming a profitable day trader? So the first thing that you need to do is discipline yourself. I know, okay, we've heard this 100 times. Discipline yourself, blah blah. But just listen to me, all right? If you think you're going to become profitable just by gambling, by throwing money into the market and doing jack shit, and then you're just chasing your losses, you're chasing greed, and you're chasing nothing, then you're gonna stay where you are. You're not gonna become like you're not gonna accomplish your goals. For example, when you actually look, okay, let's look how much trades I took in total. 13 trades in 2 months. That's how strong I follow my model. Do you think I go out there just bullshitting my way through? No, I really don't. I follow my model so much that I have I've only took 13 trades out of what 40 days. That's crazy. So second thing that I want you to do is steal my trading model. Literally, just steal it. I'm gonna by the end of the video get my trading model, but just steal it. Literally, I don't even care. Okay. Connect your risk management to your win rate. So I'm about to get into all this in a second. So how do you discipline yourself? Enter a trade, say your stop loss and take profit and go watch TikTok. Literally. It's that simple, guys. It's that simple. What do I do when I enter a trade? I start watching TikTok. I just let the trade run. I'm not gonna go stress, I'm gonna get my phone. What? Start watching TikTok. Okay. It's going down. I don't care. I'm gonna go sit in my bed, lay down. I'll come back in an hour. If I hit take profit, I took profit. If I hit my stop loss, I lost. Don't cry about it. Just accept it. Second thing is ideally aim for 0 to 1 trades a day. Don't be greedy. Don't be greedy. And there's a reason I said 0 to 1. I didn't say 1 to 2. I didn't say 2 to 3. I said 0 to 1. If you don't have to trade this day, then don't. Okay? And ideally look for your A to A plus setups. If you don't have an A to A plus setup, then don't even touch the chart. Don't enter that trade. So this is my model external liquidity sequence. We're going to get into that in a second right now. And then risk management, if your win rate, okay, this is very basic risk management. Everyone should know this. If your win rate is 40 to 50%, go for a 1 to 3 risk reward ratio. That means you're risking 10% for 30% winner. And then if your win rate is 50-60, go for 1 to 2, 1 to 3 if you like being safe. And win rate 65 plus, you're allowed to go 1 to 1, but still recommend 1 to 2, 1 to 3. So simple as that. Write this down somewhere in your notes or something. It's nothing crazy. So what is actually my model? Okay, actually I made a whole video about this, so let's actually just go back to this video. All right, so I'll honestly just explain it from scratch. It's nothing serious. All right, you go here. What do we look for first? The first thing that we look for in my model is called external liquidity sequence. Why is it called external liquidity sequence? That's not even that complicated. You have what you look for external liquidity. So let's say you're going up, down, blah. Okay, this is horrible. Let's say you come up here, right? Come up here, and then blah blah. Okay, blah blah, and then you're coming down to the zone where we have external liquidity. What the fuck was that? You're coming down to the zone where you have external liquidity. First thing we want to do is we want to find some sort of accumulation. So we want to say we have accumulation right here. Okay, perfect. We want market to manipulate into this external liquidity. We're looking for either rejection off of it or maybe sweep it. And then right after that, we want to answer on distribution. So yeah, it's very simple. Power of three, blah blah. Okay, Faisal, how is it? Why is it called external liquidity sequence? It's power of three, blah. Just listen. This model it's the next thing you actually need to. There's a couple extra steps that you want to do to make sure it's an A plus setup, and then you want to answer trades again off just A plus setups. First thing, you should only be finding external liquidity on the 1 hour chart. Write this down. Only on the 1 hour chart. That's it. If you don't find external liquidity on the 1 hour chart, do not enter the trade. If you're finding liquidity on the 5 minute, then no, that's poop. That's poop ass. All right, that's shit ass. All right, I'm keeping it a buck with you. All right. Second thing you want to do is go on the 5 minute and you want to look for a market structure shift towards the upside. So let's say we're making lower lows and lower highs. We want to break this lower high, and that's our first confirmation for a trade. Second thing, you want 9 and 21 EMA switch. After that, what do we want? Hold up, I'm zoning out. Market structure shift, 921 EMA switch, and then third thing we want to do to actually confirm our entry is a inverse fair value gap. That is pretty much where our entry is going to be. And also, when we have a market structure shift, we're looking for a candle with displacement. So if your candle doesn't cause an imbalance, then that means it's not that much, doesn't even have that much buying potential. Let's keep it a buck out here. So market structure shift, the displacement. Okay, what else? And then let me just check. I didn't miss anything. Yep. So external liquidity, wait for market structure shift, the EMA switch, and then enter off fair value gap. It's this simple, 4-step process, very simple. So come down here, we have what? Liquidity, reject off it, we have a big candle. And then next thing we're going to be looking for is entry off. Let's see, we have an inverse fair value gap right here. We'll enter off of it. And then we're looking to take profits on top of liquidity, risking this much to make this much. And boom, just like that. If you follow this model and you follow all the rules that I set for you, you will become profitable. Now look, if you guys want to learn more about becoming profitable, then join the Discord. It's completely free, just a bunch of free sauce. You can learn about my strategy. It's very simplified. All I'm doing is simplify it to the lowest standard right now. I understand I should be probably going through charts and stuff, but no, I want to get this through you guys' head. Just get down. Actually, one more thing about all this is our inverse fair value gap. Let me tell you guys a secret real quick. The inverse fair value gap we want to look for is this type of inverse fair value gap. I actually did a reel about this. So we want to look for market to inverse. Let's say we have a lot of liquidity up here. Our inverse fair value gap is we usually want it to be what? We don't want it to be a bullish candle. We want it to be, for example, this is a bullish. Over here, this is a bearish. So this imbalance is actually really strong. We're looking for a weak imbalance, which is like what? Bearish, or bullish, bearish, bullish. So we're looking for something, or maybe like even bearish, bullish. You know what I'm saying? It just can't be like straight 3 candles. If it is, it's gonna be like an A setup, but then this would really make it an A plus setup. So yeah, but for any extra information, like I would say just what? Okay, where were we? This is like from 2021 when I started trading. Anyway, yeah. So join the Discord. A bunch of free sauce there. I'm making an entire boot camp on there, and yeah, what else? From having SMC boot camp, learn my entire concept, live trade with me daily, and yeah, I'll catch you guys.